Joining us for more insight is Dealogic head of Southeast Asia, Romaine Jackson. Romaine, this is a turbulent week for Uber and really a lot of companies to be making their debut amid market jitters over a trade war with China. Let's just put that out there first. But are you surprised at all in how Uber opened below its IPO price?
Yeah, I think we have to look at the conservative pricing of this transaction. And I agree with the point that was previously made that what Uber's really looking for are investors who are going to be backing the long-term vision of the company and looking to see that pathway to profitability realized in a near enough time frame. So at the deal's pricing at $45 and giving it a deal value of $8.1 billion, that's still the fourth largest tech IPO in history and the second largest US tech IPO. So it's still a landmark transaction, and it's still an evolution of the business model. Uber's listing in what is a very challenging climate, but what we try to help our clients to do at Dealogic is to take a step back from some of the short-term noise and to actually put these deals in context. If we're to look at the general health of the IPO market, it is actually a very healthy IPO market from a tech listing perspective. We can look to Pinterest, we can look at Zoom, and most of the tech deals which have come out this year have actually performed quite well. So yes, Uber is bucking the trend, but if we are to look at tech performance, the average return on the first day for New York Stock Exchange is 24%. For NASDAQ, it's 22%. Now, that's still behind Shanghai and Tokyo, but yes, I would say Uber's bucking the trend.
Well, let me just ask a little bit more on that, because the stat that we got from your compadre at Dealogic, Ed Jones, who had handed this over before, saying that out of all the companies that have IPO'd with a market cap above $5 billion, Uber is now the first to actually open for trading below its IPO price. So granted, it might be, you know, the one stock, the one company that's bucking that trend. I mean, it's also the biggest IPO of 2019. So what do you think this might say to other companies that may have been planning to come out later on in 2018 or 2019?
Yeah, I think we knew today was going to be challenging. If we look at all the volatility in the market, what's going on with the uncertainty around the trade wars, a lot of the macro indicators points to a difficult listing environment within the window of this week. I think Uber, the success of Uber is really going to be a medium to long-term story. It's not the best narrative opening below the price on the first day, but it'll be interesting to see where they finish today and where the share trades over the next week and next month and beyond.
Got it.
Romaine, in terms of the timing, Uber execs are saying that they are much more mature than some of the other companies that go public. Can you tell me about the timing of this and if they should have gone even sooner?
Yeah, it's really difficult, the art of timing an IPO. I mean, the IPO involves so much preparation, so much foresight, a lot of work on marketing, and they couldn't have predicted some of the macro impacts that was going to affect the markets this week. So I think it's really having the confidence in the narrative of the path to profitability. And this really is just a transaction which should point us to Uber trying to realize the benefits of the network effect and really looking at the diversity that this company offers. It's not just a one-trick pony. A lot of this proceeds, over $8 billion, is a lot of firepower for their war chest. And if this over $8 billion is spent on CapEx, which drives top line and bottom line growth, investors will be happy if that money is well spent.
That's a great point. It leads me to my next question. How you doing, Romaine?
Hi, how are you?
So with the cash that Uber just brought in, what happens if they really cannot show a track to profitability soon? I think some of the issues that you look at and things that you cannot control. Obviously, geopolitically, we have a lot of things going on right now. This is just, we cannot make an assumption that just because you raise capital right now in this environment, that you're going to be able to take a company that lost $3.7 billion and all of a sudden start to make money. There's a lot of things that could come about, as you know, and there's some issues that they have to take on, from legal issues, getting this employment thing straightened out on whether or not, you know, they're going to qualify, you know, the drivers as employees or not. You never know where that can go, because that could be a whole political battle in the courts. And so just give me your opinion on that. Like, how can you really navigate that when you're doing so much I mean, they're so diversified, as you mentioned. What can they do to try to drive home that revenue?
Yeah, I think that the key theme within this roadshow period and some of the key questions investors perhaps would have been asking management is questions around execution risk. It's really, do investors believe management are capable and are well capitalized enough to deliver on the business model over a time frame that's acceptable to them? And I think that that's the feedback that management would have been hearing on the roadshow. They would have reassured investors enough to be comfortable pricing at $45 towards the low end of that range. And you could point to that being a wise call given the situation that they're in. But at the end of the day, there's been a lot of comparisons with Amazon. There are some differences with the valuation of Amazon when they listed and the valuation of Uber today. But again, there was a lot of risk around Amazon executing on the business model they proposed back in '97.
And you got to assume, after we just saw Lyft report its first quarterly earnings report, that the pressure that they saw is also going to be on Uber when they get to that point as well. All right, Romaine Jackson, thanks so much for joining us. Appreciate you taking the time.